Assalamu alaikum everyone. So welcome to another Ask Me Anything session by Epiphany. I'm Soha and I'm going to be interviewing and hosting Nir Kaissar today. So we've already introduced him a bit through our online social media websites, but I'm going to add him to the stream and let him introduce himself a bit.
My name is Nir Kaissar.
Hi, you're on here right now, yes.
Can you hear me okay?
Yes.
Okay. I am coming to you from New England in the U.S. I am a columnist for Bloomberg Opinion. I write for Bloomberg about markets, economics, public policy, and a host of other subjects. I'm also a founder of an asset management firm, Unison Advisors, here in the U.S. And I have, before I got into the wonderful world of finance, I was a consultant for a time and a lawyer for a time, but that's all in the past now.
That's all in the past, but we would still want to know, like, how did your career as a lawyer lead you to Bloomberg? Like, what was the journey and what made you reach Bloomberg?
You know, I couldn't have known that it was going to go this way, that it was going to lead this way. But it's all been super helpful. I mean, I started out as an undergraduate at university. I started as a business student, business literature, studying finance, accounting, statistics. From there, I worked for Ernst Young, which is the consulting arm of Ernst Young, doing valuation work for mergers and acquisitions. And then I went to law school because I wanted more education. I went to law school. I ended up working on Wall Street for many years, doing during the boom years of the 2008, doing mergers and acquisitions. And all of that informs what I do now, you know, because I write a lot on public policy and economics and markets and finance. And to be honest, none of that would be possible really without that background. So I didn't plan, but it turned out to be very helpful.
Oh, that's good to know. So before diving into all of these questions related to markets and finance, I'm just going to ask you, how are you dealing currently with the pandemic, and how are you coming out more stronger and positive with all that's going around, especially considering how it is in the US at the moment?
You know, it's a tough question, I think, because, you know, obviously it's a global problem and a lot of people are suffering from it. And the US is so big, and it's very difficult, I think, for any one of us individually to get our arms around the true impact of it. You know, we all see the economic numbers in the US. You know, we have the unemployment is rising at rates we've never seen before. We're quickly approaching unemployment levels that we haven't seen since the Great Depression here in the US. And, you know, when you see those types of numbers, it's obvious that they're having a dramatic impact on a lot of people. But on the other hand, you know, because we're so secluded, because we're distancing, we're necessarily not coming into contact with as many people as we would otherwise want. And so I feel like none of us individually have a human sort of connection with the suffering that it's causing. All we can really see is the numbers. But I'm hopeful that in the weeks ahead, in the months ahead, as we have an opportunity to reconnect, we also have an opportunity to reach out to help, you know, to see sort of firsthand the impact of, you know, who is sort of suffering from this pandemic, and try to address those problems directly. But you know, what I can say in general terms is everyone is trying to do the best they can here in the U.S. to try to stay safe, to try to stay distant. And I think, as far as I can tell, everyone is taking it very seriously.
Yeah. Obviously, like, everyone's being impacted by it in their own way, but obviously we're going to focus on the markets and investment currently in our conversation with you. So I'm just going to dive into the very first question that we received. So you mentioned in one of your articles that this is not 2008. So what the financial crisis that we're facing in 2020 cannot be compared to 2008. So what differences have you observed? And yeah, just go ahead and answer that. Then I'll go on the second part of the question.
Okay. Yeah, I think there are two big differences. The first difference is, I think, in the level of asset prices. So, you know, one of the things I think that people take for granted is before the financial crisis, you had a big boom in global asset prices. And it wasn't just the US, it was, I would say, predominantly the rest of the world. Asset prices in Europe and Asia and a lot of the emerging markets were very high. The years between the the emerging market crises of the late 1990s and the dot-com bust in 2000 in the U.S. and the financial crisis. Those years were very good years, not only in the U.S. but globally. And so you had a situation where any crisis was going to cause a lot of financial damage because asset prices had had a lot of room to reprice. And that's what you saw. I mean, no one could have predicted the financial crisis, but once it came, asset prices began to tumble, and it cascaded all around the world and caused, I think, a lot more devastation within the financial sector than it otherwise would have. Now, fast forward, since the financial crisis, yes, the U.S. markets have done very well, but the rest of the world, the markets have not boomed the way that the U.S. had. And so I think there's a lot less room for asset prices to reprice. Not only that, but I would say that the repricing that we've seen in February, March, and the beginning of April, in most of the world, I think that's about as much as you can expect. When I look at asset prices in many countries, they're at or below the prices at the bottom of the financial crisis. And so I think that makes it very different. Now, obviously, what makes it different from an economic perspective is the financial crisis was easier to solve. It may not have seemed that way in those days, but a financial crisis is really just about shoring up banks. Whereas this is different, obviously. This is not about shoring up banks. This is about trying to restart economies. So it's different in two ways, one of which I think will make life easier, and then one of which might make life more challenging. We'll see.
Yeah. And do you think that markets and financial systems have become more resilient with time and more able to bear with the shocks in this year?
I think it depends on where you look at, but in general, I would say yes. Certainly in the developed countries, I would say that the banks and more importantly, the regulators have learned a very hard lesson from the financial crisis, and I think they've been laser focused on reconstituting their banks. I can tell you that in the U.S., reserve requirements are more stringent than they've ever been. That banks are, I think, better capitalized than they've ever been, and it's very difficult for me to imagine a scenario where this turns into a financial crisis. Even though I know that that's feared by many, I just don't see that happening.
Yeah. And how would you describe the approach taken by investors in the US at this point of time when they're looking towards investing in stocks worldwide?
That's such an interesting question because there is such a stark difference, I think, there's such a stark difference in the way that investors in the U.S. are approaching the U.S. versus the rest of the world. To some extent, that's a continuation of recent years. U.S. investors, I think, have been very shy about moving their money overseas. And you can see that in the flows, and you can also see that in the valuations. And I think that that's been intensified by this pandemic. And when I look at the way that the U.S. market is valued relative to the rest of the world, it's just shocking. I mean, the U.S. to give our viewers some perspective, the U.S. stock market is trading at valuation. It doesn't matter how you look at it. Trailing earnings, forward earnings, however you want to look at it, it's trading at a higher multiples today, at a higher valuation today than it was before the financial crisis. So the U.S. stock market is more expensive now than it was at the peak of the market before the financial crisis started. That's nowhere near the asset prices that you're seeing in the rest of the world. So I would say that U.S. investors are very bullish on the U.S. I don't know why, to be honest, because we're entering a period, I think, of unprecedented uncertainty, certainly in anybody's lifetime. But that's, I think, the sentiment.
Do you have any information on how they're looking at Pakistan at this point in time in terms of investment?
I don't know on a granular level, but when I look at flows and when I look at valuation, they imply to me that it's not that U.S. investors are really not venturing out as much as they should. And I think it's a missed opportunity personally, because I think a lot of the growth is going to come outside the country, outside the U.S. And I think that the prices there are much more reasonable. And I think not venturing out is a mistake. But we'll see. I mean, it's possible that depending on how this pandemic plays out, it's possible that it might open U.S. investors' eyes to overseas investment.
Yeah. So that's interesting. And what do you think are some of the challenges that businesses, including small SMEs and startups, will face post COVID-19?
That's a very interesting question because that ultimately when we're talking about asset prices, we're really talking about two things, right? We're talking about the prices and we're talking about the fundamentals. And your question really goes to the fundamentals: is what's the world going to look like after it passes, or even as it passes? And your guess certainly is as good as mine. I don't have a crystal ball, but I can tell you that my deep suspicion is that this is going to change us in fundamental ways. And let me just give you a couple of examples. One is, I think that workers in the US, and I suspect in other countries, have really been asking themselves for years, with the availability of new technology, why work needs to happen the way it has happened, why people need to spend 2 hours a day going into an office, why they need to be crowded with their colleagues into pens when they can be doing the same remote locations. And I think that is going to open a lot of managers' eyes to the possibilities. And I think that's going to fundamentally change where we work. And that has a huge impact, because think about all the cities, the ecosystems in those cities that are built on this community of commuters that come into the city to work. You take that away and you have a whole host of winners and losers, obviously, but a whole host of issues that come up. And so I do think the fundamentals are going to be impacted meaningfully. I think for most people, they're going to have to sort of get used to where it's not as easy to have revenue come in the door. On the other hand, I think you're going to have some companies that are going to do very well from this, mainly the companies that you've seen with their stock prices going up in recent days, the Zooms, the Amazons, the companies that do well regardless of where they are or where their customers are.
Yeah, so that's interesting. The fact that during this pandemic, there's been kind of a digital boom. Everyone's just working remotely and on the cloud and online. But how do you think that impacts productivity? Because when you're working from home, then sometimes you're kind of expected to work all day. It could happen in some cases, or there's not fixed timings. So what do you have to say about that?
Productivity has been a real puzzle because we had a long period where productivity was going up, very quickly, and then for some reason, at least in a lot of the developed world, and I would say in the emerging world, productivity has still been robust, but in a lot of the developed world, productivity just fell off a cliff, and we haven't been able to figure out why. But when you think about the effect of productivity, I think in terms of the pandemic, I don't know that it's going to have a meaningful impact, mainly because productivity growth hasn't been very robust, but also because the early evidence to me suggests that this is not going to have a whole lot of impact on the amount of work that we do. I think that workers will be just as productive, or have been just as productive now as they were before the pandemic. The issue, though, is jobs. What do we do with the workers who can't physically do their work in this type of an environment? I think that's going to be very tricky, and I think it might accelerate some of the things that would have otherwise taken longer to play out, such as the movement from manufacturing services, such as the movement from desktop work to online work. But on the whole, I suspect that productivity is not going to be impacted a whole lot.
Okay, that's interesting. So this is one of the questions that we received. What is the state of global mergers and acquisitions and of venture funding?
What was the second part? Mergers and acquisitions and?
Venture funding.
Oh, venture funding. Well, mergers and acquisitions, I think, are going to be on hold for a while. And I think primarily, a lot of people assume that it's because it's difficult to do deals in this type of an environment. I think the reason is it's very difficult to value companies in this type of an environment. I mean, when you're looking at an acquisition target, what do you assume about its future cash flows? That's just a very difficult thing to know. And so I think mergers and acquisitions are going to be on hold, with the exception of a few very enterprising acquirers that have deep pockets and can afford to make mistakes. I think mergers and acquisitions are going to be on the back burner for a while until we get some more visibility about what the future course of the economy looks like. Venture, I think, is different because venture. What's interesting about venture is it's these types of environments, I think, that create fertile soil for new startups to come along. First of all, I think crises open up everyone's minds. I mean, people in general, I think, are open to new ideas during crises. But also, it hampers some of the existing players. And so it gives the space for new companies to come in and say, hey, we have a better way of doing this. give us a chance to come to market. So I think venture will do well. I think you also have to keep in mind that mergers and acquisitions is a big game. You need a lot of money to play at that table. Venture is something that you can do relatively modestly if you're willing to take the risk, and there's still a lot of money around. So I think venture is going to do very well. And if I'm an entrepreneur and I have an idea that I think is credible, this is the time I think to strike.
So I'm just going to enhance on a bit of the stuff that you just mentioned, that you feel that the soil currently is fertile for startups to emerge. So what kind of advice would you give to all those startups that are willing to come up with an idea and to just take the risk?
Well, I think the first thing, this question is probably funding. And the one thing that I would say to them is I would not get stuck in traditional ways of funding. In other words, I wouldn't assume that the only way to get funding is to go to the traditional hubs of venture financing and pitching your ideas there. I think there are a lot of investors, family offices, even pensions, a lot of non-traditional players in that space that have a lot of money, that don't know what to do with it, that are facing a world with very low interest rates and risks that they may not necessarily want to take in the public markets, and are looking to diversify. Not only that, venture has been one of the few places that has been just a resounding success in recent years. So there is some recency bias there. Obviously, from an investment perspective, what happened in the past is not necessarily indicative of what's going to happen in the future. But I think it does mean that there's more enthusiasm for venture than I think people assume. And if I were looking to start a venture firm, to start a company in this environment, I would cast my net broadly in terms of where to raise money. Now, obviously, the rest of it is going to be a lot easier because I think there's a lot of talent looking for new opportunities at this moment because it's a crisis. And obviously, there are ways to work now that weren't possible 10 years ago. So to me, it's really about financing. And happily, I think for venture, there's a lot of opportunity there.
Yeah. So people really wanted to ask you how you feel about the 2008 financial crisis and how are you comparing it to 2020? And there's this one question that says that banks collapsed in the crisis of the in 2008. So how do you think, what will the future be of the financial system post the crisis that we're facing currently?
Well, I think the financial system is. I don't worry at all that the financial system is in trouble, and I don't even think that that's going to be a problem if this goes on longer than anyone expects. And not only because the banks are well capitalized, but also I think central bankers around the world have effectively said we are going to spend whatever it takes. We're going to print as much money as it takes in order to keep the financial system healthy. I mean, obviously, they're doing way more than that, right? Because now they're getting they're even bailing out private companies. The Federal Reserve in the U.S. announced a couple of days ago that it's going to buy corporate bond ETFs, which is unprecedented. So I don't worry at all about the stability of the financial system. I think the question that I do have, though, is about the profitability of the financial system. Before the financial crisis, the financial sector was hugely profitable, as you know. And that's part of the reason why the bubble in the sort of built up. Since the financial crisis, because of the regulation, because of the reserve requirements, it took a long time for profitability to come back. We finally had profitability just before the pandemic in the U.S. that looked like profitability before the crisis. But it seems to me that this is going to be a very challenging environment for them, with interest rates low, with there being very careful spending. Not an environment for banking money. And so what I would say is the system is stable, but the system is, I think, going good. It's going to be challenging for them to make money, at least the way it has been in recent years for a while.
Yeah. This question pops in my head every single time I hear about COVID-19 and the effects that it has been having all over the world. And what I'm worried about is how the developing nations are going to suffer from this. And so what do you think about the financial systems of developing nations per se?
I'm bullish on developing nations in general. And you can, if you read my columns, that will probably come through. I think developing nations in general are underestimated by investors in the developed world. I think a lot of it is a lack of familiarity. It's a lack of knowledge. It's a lack of sort of being on the ground and seeing what the countries are up to. Having said that, I do think that developing countries do have some headwinds. For example, those that are pegged to the U.S. dollar, I think ultimately are at the mercy of the decisions of the Federal Reserve in the U.S. And so that's going to be an obstacle for them. I also think that to the extent that they are an export, to the extent that we're talking about export-based economies, I think that could be challenging because consumption in the developed countries, I think, could be challenged for the foreseeable future, maybe a year or two, maybe longer. So that could be a problem. But on the flip side of the coin is they are industrializing, many of them at huge rates. They have standards of living that are rising well above average, well above the world average. And I think they're also more nimble. I think they're able to, because their economies are smaller, I think they're more able to change their economies in ways that the U.S. can. The U.S. is a huge ship. It's very difficult to turn it around. That's not true for a lot of the developing world. So I'm bullish on the developing world. I'm certainly not Pollyannish about the challenges, but if I'm an investor right now, I prefer the developing world to the developing world personally.
Oh, well, I mean, that sounds promising for any of the startups that are listening to us right now. So what do you think is the future of venture capital and private equity investment?
Private equity is the place where I'm most concerned.
Okay.
And it's not surprising. So the first thing I would say is there's a huge amount of money moving to private equity, and I think for relatively obvious reasons. When you look at an endowment portfolio or a portfolio, what are their options? They have bonds, which are going to give them nothing. They have public market stocks they're terrified about. They have hedge funds, which have been horrible over the last 10 years. Then you have private equity and venture. We'll leave aside venture for a minute, but let's focus on private equity. When you look at private equity, that looks pretty attractive because the returns have been great, and a lot of their peers are doing it, and so there seems to be just a whole lot of inertia moving in the direction of private equity. The problem, as you know, for private equity is there's only so much private equity investment available. I mean, it can't. Private equity in the U.S. now is a $4 trillion industry. And it just seems to me that private equity can't sustain that kind of asset. And so they're getting into where they shouldn't be getting into. They're starting to take over, bigger parts of the economy, whole industries. They're looking for targets in the public market to take private. And I think those are landmines. I think that the private equity returns are going to be a lot lower than they were in the past. Not only because the deals will dry out, but I think as a political matter and a public policy matter, I think private equity firms are going to get into trouble. They're going to start to impact, I think, more and more of the U.S. anyway, and I think there's going to be backlash against them, and I think that's going to make it very difficult for them to operate. So I'm very concerned not only about the public policy impacts of private equity, but that investors are walking into a situation where returns are going to be very unsatisfactory.
So someone's asked us, what happens when a stock market crashes? Do you lose all your money?
Well, if you own the market, it's very difficult for me to imagine a situation where you lose all your money because, when you own a broad market, let's just take the U.S. for example, but I think you could say this about any country. When you buy, say, an index fund that effectively owns the broad market, you're buying the entire economy. And unless you think the country is going to go out of business, which I don't think is going to happen, then effectively, the value of that investment is not going to zero. It will be temporarily impaired, right? It might go down a lot. I mean, during the financial crisis, you had stock markets that were down 50, 60, 70%. But they bounce back. They have always bounced back. It's never a guarantee, but I think it's hard for me to imagine a situation where they don't. And so, what I would say to investors is, if you own a broad market fund or a broad market index, hang on. These crises will come along every few years, but we always get to the other side of them. And you're not going to lose all your money.
So we have a few questions that are a bit off topic, but more related to you as a person. Someone's asked, what is the best piece of advice that you've ever received?
The best piece of advice is to never take a job for the money. Is to always take a job because it's an opportunity to grow, and it's a subject that you like, and I think that's advice that I would pass to anybody.
That's interesting. How do you manage your schedule during this pandemic?
Well, it's very difficult. Yeah, I'm coming to you very early in the U.S. Sun's coming up behind me.
I know.
The family sleeping upstairs, although I probably woke them up. You know, it's I don't know how other people in other parts of the world are sort of navigating this, but you know, for us in the U.S., schools are closed, and so you know we're trying to balance. If to those of us that have kids, and I have two young kids, you know, we're trying to balance doing our work and schooling the children, and it's a very difficult balancing act. On the other hand, you know, I have to acknowledge that you know I'm one of the fortunate ones. You know, I still have work to do, and you know, and I'm in good health, and you know, a lot of people are not in that position, and so you know, I am very fortunate. I have nothing to complain about, even though you know it's certainly challenging.
Yeah, I mean, definitely. So how do you define success?
You know, when I was in school, I had a teacher who used to say to me um, that success is getting what you want, but happiness is wanting what you have. And I would say
Interesting.
that you know I would say that success for me is probably closer to happiness. You know, success is really I think about feeling fulfilled and in the work that you do, and the things that you have, and the relationships that you have. I think those things are. I think those are the important things in life, and I think they too often get lost. And but you know, if not to be too sentimental, but I think this pandemic is an opportunity to reorient ourselves to that sort of thinking. You know, we're as we're distanced from people, I think it's an opportunity to reflect on how important those things are in life,
Definitely.
and that's to me that's success.
Yeah. So, I mean, thank you so much for your time today. So, do you have any piece of advice that you'd like to give before we sign off?
You know, the one thing I would say is that I think this is going to be a difficult environment for the foreseeable future, and
Yeah.
and you know, there's a lot of chatter about how to navigate this as a financial matter. And I wrote a column for Bloomberg not long ago, basically telling people to sit on their hands and do nothing. And knowing nothing else about our viewers today, the one thing that I can tell you that you will not go wrong doing is sitting on your hands and not reacting, certainly not reacting in the moment to what we're going through. It will pass. We will come out the other side, and we will grow again. And I think you just have to have faith in that.
Definitely. Everyone should go and read Nir's columns on Bloomberg. I must say, you're absolutely an amazing writer.
Thank you so much. That's very pleasure to be with you today.
So, yes, thank you so much for your time, and we'll look forward to hosting you again, definitely in the future.
Sounds good. Thank you.
Right. Thank you. Bye.
Bye.